Yep, everybody survived. So, all right. All right, rent and royalties. So we're going to start out in this chapter. We got rent and royalties. A lot of stuff we're going to talk about, the rental property and the royalties on the Schedule E. Okay, so we're going to talk about rental income received for allowing someone to use or occupy real estate or personal property. We're going to talk about depreciation in this. Can generally be deducted for rental income. Rental activities can result in either a profit or a loss. However, rental income is generally considered a passive activity, with rental losses limited by passive activity loss rules in most cases. The ability to deduct rental losses can also affected at risk rules. Okay. Royalty income is generated from payments often resulting from license agreements received for the use of a valuable right. Okay. All right. A lot of times you don't see a lot of royalties anymore. I have a couple people that are teachers that write books that they get royalties on things. Most of the royalties that I see come over from K1 that are on there, that they're coming from a partnership or an S Corp or something like that. So, but yeah, royalties. And then it says on here, royalty income and expenses from investing activities such as oil, gas, and mineral properties, copyrights, patents are reported on Schedule E. All right. So we're going to determine the makeup of rental income, correctly report rental income expenses on the tax form, determine the makeup of royalty income and the reporting of those. Okay. All right. Rental income. Generated by a variety of sources: personal property, services provided to renters, and real estate, and for different purposes, for profit, not for profit. Okay. If rental income is generated, then rental expenses for at least 3 out of 5 consecutive years, the IRS presumes the rental motive is for profit. Okay. So the IRS really has decided for you whether you're in the business to make a profit or not. Okay. Income generated from renting personal property is reported on Schedule C, profit or loss business. Okay. Right. And then we have real estate income. Income generated from real estate is reported on Schedule E. All the following are considered gross rental income. All right. Now, collected rents, obviously, advance rent, okay. Expense paid by a tenant in lieu of rent, all right. Example, the tenant pays the water bill and deducts the amount from the rent paid. That makes sense. Property or services received in lieu of rent. You got somebody that's living there, you kind of give them, what do you want to call them, a landlord? Not a landlord, what they call those, supers? Yeah, type person, okay. Payment to cancel a lease, security deposit, and lease with option to buy, okay. Now, back up under the one about lieu of rent. The amount of income received equivalent to the fair market value of the property and or services. As a little side note, if I'm renting to a relative below fair market value, am I in the rental business? What was that, Patrick?
No.
No. Okay. Where would we show that income?
Other income, right?
Yeah, on 21. Yep, on the 1040. Okay. So if we're not, because we run into that quite a bit with people with doubles. And you go, that's all the rent you got? Well, yeah, it's my brother. Well, yeah. So, then they're, yeah. Okay. That's when you got to kind of get them to stop, because then the story to support it as to why they're only charging that amount of rent to the brother. Then all of a sudden, well, is he declaring, so there's a whole lot more to it.
Let me ask you this, going back to the rent not for profit. Let's assume your rents, you make a profit with your rents, but now you have to take the depreciation of this property, which wipes out that rent. How can the IRS say that you're not in profit? Because they're going to recapture that.
Well, that's different if you're taking that depreciation. The not-for-profit is a little different.
Well, okay, but the problem is, let's say you're running a property, you're not actually making a profit on the rents, your expenses, and depreciation in particular negates any profit. Eventually, that's going to be recaptured. So I assume you wouldn't have a problem.
No. Was that a personal question, Patrick? Okay. All right. I get a lot of those, so yes. All right. Rental expenses. Common property rental expenses can be deducted to help offset the taxable gross rental income. These expenses must be related directly to the rental property and/or the generation or collection of rental income. All right. Those categories, a lot of them look pretty familiar. Yep, Schedule E, and almost ditto of what we saw in the Schedule C. Okay, so we have all those. It's very similar because we're in the business. It's just a little bit different. Okay, because is our Schedule E income subject to self-employment tax? No. Okay.
Well, it could have been under the new tax law, but it's just
okay. Been following that, huh? Okay. All right. The pre-rental expenses, ordinary and necessary, there's our words again, expenses for managing, conserving, or maintaining rental property are deductible from the time the property is made available for rent. Okay? So, if I buy a property in August and I'm fixing it up.
Advertise it for rent.
Why?
Well, because you want to claim everything, all those expenses from day one, but you can also interview people who are going to be town centers.
Yeah. Because
what if they don't rent until September?
The following year?
No, that, I won't say you bought in August or September, October. Say October, you miss a month or 2 months.
Mm-hmm.
The IRS going to give you a hard time?
No. As long as you can show that you were actively trying to rent it. Exactly. That's the intent. Punch list? You got the punch list going there?
Yeah.
Okay. All right. And what's that next part there?
Election.
Yep. Okay. There. So that's what we'll talk about. I'm going to get those instructions because when I read this, first time I'm going, yeah, I'd rather see you have it in action on it. So I got to get those instructions from Esther on there. Okay.
If you split the invoice, is that a problem?
What do you mean split the invoice?
Well, let's say somebody comes in carpeting. You have 4 units. And what'll happen is you'll go to Home Depot. They say, I want these 2 apartments carpeted. And they'll come in and say, okay, it's $3,000. We'll come and do it. Now you got a bill for $3,000, but it's 2 separate.
2 separate
apartments.
Are they separately listed?
Yeah.
Okay. When you say 2 separate.
In the same building.
Well, but see again, you can't because the building, if it's a quad that's 4, then that's 1 building on your Schedule E. You know what I'm saying?
I understand.
So, because, we're looking at it as, when you look at the Schedule E, it's got column A, B, C, if it's in there. If it was a case that one was A and 1 was B.
So then what?
So separate addresses?
Yeah.
Or alternatively, you'd ask them to split the bill.
Yeah.
So you'd have 2 bills, same year, for carpet.
Mm-hmm.
Let's say $1,500.
Mm-hmm. Yep. Depreciation, here we go again. Okay. What rental property can be depreciated? To depreciate property, it must meet all the following requirements. The taxpayer owns the property. That makes sense. The property is used in a business or income producing activity, such as rental. The property has a determinable useful life, and the property is expected to last more than 1 year. Anybody buying rentals that they don't expect to last more than a year? There'd be a whole other lot of legal issues that would be in there if you don't think that the rental that you're putting out there is going to last a year. So, anybody feel the earthquake yesterday? No? We talked to somebody down in New Jersey, they felt it a little bit.
Oh, they said in New York. Where did it happen?
Delaware, I think. Didn't they say Delaware or somewhere between Baltimore and New York City, but I heard Delaware too. But it was like 5.2.
Yes, sizable.
Mm-hmm. It is. It is. And then obviously a whole bunch of jokes came out about the earthquake. So, basis of depreciable property. The basis of property used in rental activity is generally its adjusted basis when it was placed in service in that activity. This means its cost or other basis was acquired, adjusted for certain items occurring before it was placed in service in rental activity. Okay. If property was used for personal purposes before changing it to rental use, its basis for depreciation is the lesser of its adjusted basis or its fair market value when changed to rental use. I think, Patrick, weren't you asking about that?
Yes.
About somebody that, you had an example the other day that you were trying to remember what you said.
Well, I was talking about the depreciation of what happens, say you have this property, you live in it, then you make it a rental, the basis starts to have appraised value at that time.
Yep, exactly. That's kind of, yep, exactly. Okay. The section 179, we remember, says recovering part of all the cost of certain qualifying property in the year the property was placed in service. The deduction is not allowed for property used in connection with residential rental property. Okay.
Right, so you gotta have a business on the side with tools and stuff.
Okay. Special depreciation that we talked about in the last chapter. Some properties used in connection with residential rental property activities may qualify for a special depreciation allowance. The allowance is figured before figuring the regular depreciation. Okay. Take a look at that. And then obviously it says refer to chapter 14. All right. Okay. So on page 15.8, we're looking at some recovery periods for rental activities. And most rental property furnishings fall under the what? 5-year recovery period. Okay. So we can see in there. And anybody that's rentals, the carpets, they last in 5 years. So how'd you like to have to try to get that carpet if you lived in a rental that had 9 years, the carpet for 9 years?
We had, every time you filled up a layer, it's like Frank's. Like the guys wouldn't even move it. One group wouldn't even touch it. We had to send another group.
Wow. All right.
Parking lot. Would that fall under the 15 years or?
For where you're talking about roads?
Yeah. Does that count like driveways or parking lots? It's residential.
Yeah, I would say so. I would do that. Yep. Yep. So driveways lasting 15 years, that's not really true anymore either, is it?
No, no.
So, all right.
Depends on the car.
Down south.
And what it is. I mean, if you're blacktopping here 15 years, you're getting lucky.
Right.
You know, if it's concrete, you got a good chance.
Yeah. So if you're doing it in Texas.
Well, then you got a lot of the heat. The heat's in the heat. So heat buckles. All right. What is our lifetime for our property itself? 27 and a half. Okay. All right. What's that?
Same as a vent pipe and plumbing.
Yeah, and the furnaces.
Yeah, ATS, but that's the straight line.
What's that?
That alternative depreciation system.
Yeah.
Well, that's if they have to do straight line.
Yeah, and we see a lot of those when they come from other accounting places that they're using 40 years. So, but really the 27 and a half.
What you'll see most.
Yep.
Can you correct that
No, you have to stay in there.
once they stay?
Yeah,
Right.
because you have to look at that. You know, in the menu there, you have the choice of pulling down so that you can continue the method.
Right.
Because what do you not want to mess with? Prior depreciation.
Yeah.
And then all of a sudden if you have a situation of recapture, last thing you want to do
What do
is,
you usually do to figure that out?
what's that?
Recalculate it yourself or,
For recapture?
well, when you
Prior?
put in what the prior years was, do you always recalculate it yourself?
Got the little table right here.
Okay.
Yeah, so there's nothing tax-wise. It's pencil and paper. You're sitting down there. So, that, you know, and most of the time when you have a new client with rentals, that's the biggest time consumption. Because you have to, you know, because tax-wise prints very nicely the depreciation. It prints, let me see if I can get one of the print. Because otherwise, a lot of them just print the 4562, which gives you no clue on anything. And please, please make sure that when you do a return, if you're depreciating something that falls under one rental property or one business, do the asset worksheets under a 4562, Do not make one for each asset. Okay? What I mean by that, I've run across returns from other offices where somebody keeps making a new 4562, and I look at my tree on the left and I'm going, really? Because when I print it out, it, you know.
Because you can put 3 properties on one form.
Well, Schedule E, but I'm talking about the depreciation. Who was our depreciation project? Yeah. What I'm talking about is this, David, is have one, this is a Schedule C, one depreciation with the asset worksheets underneath it. Okay. I've run across returns where each one of those assets had its own 4562.
Okay.
And it doesn't show you anything.
Okay, you have a 4562, I know disparate, there's like the assets with disparate for the depreciation periods. And it takes care of that, it's in the Schedule C.
Yes.
So in the 4562, I list property, I list.
That you're depreciating something under that property? Yes.
So I have all different types of depreciation percentages, so years. And it takes care of that when it moves it to the Schedule C.
Yes. Yep. Where'd it go?
Probably have a problem.
What's that?
You probably have a problem with that.
There we go.
Now in the 4562, I guess we'd have to go through it to work out how you But isn't that?
All right. And this is what I'm referring to because the 4562. No, this is why we do the asset worksheet.
What is the difference?
That's what I'm talking about, because if I have a return come to me and everything's done on a 4562, when you print it out, it doesn't help us with recreating things. It's very difficult to.
So if I have an asset detail report that looks like this, and they have it done on a single 4562, is that what you're saying?
Yeah, those all go to 14562. That's correct. But you can see how all the detail I have to recreate, or if I have to calculate prior depreciation, because that helps me too with, you know, their method and things like that. If I look at, okay,
Why is that column for like computer and office under the 179 special?
we're filling out.
Oh, okay.
But that's a 4562. I think that tells the same story.
Well,
It does.
but how do you list more than 2 things?
Exactly. That's why I'm saying that detail sheet, you know, that's why it's so important that you list them underneath there so that you have that detail sheet, because then it creates a nice little tree on there.
So the 4562 has a worksheet, is what you use for the 4562.
Exactly.
Well, now, do you print the 4562 to go with the e-file or not?
Yes, it goes with the e-file.
Okay, but then how do you fit everything on it that's on the worksheet?
The detail just stays with it.
It does.
Yeah, you only need, for filing purposes, the 4562. The worksheet that we have, that other one that's printed out, that's why I say it's so much more important, because I can go back and look at all that detail. So that's why I say.
I show 2 on that, and the rest of it has to go on to the other page.
But if you come in with a new client and they have a return and they hand you that
They
4562,
don't have this along with it. You think should they have 2 things on there?
yep, and you become a forensic accountant, because now you have to try to, okay, what blanks do I have and what do I need to fill in? Exactly, exactly. So,
It's just spiraling.
yep, so, all right. All right. Let's see here. We have the mid-month that we have, table A6. That's probably a table that if you're going to have new clients with new rentals that you have to recreate the return, that would probably be a pretty handy little table to have with you. Okay? Because why? You know, with that mid-month with those rental properties,
Gives you depreciation.
yep, so you can figure out all the years and what percentage you use. Like I said, that's the pencil and paper, that's the work part. It's going in there and trying to recreate that. Okay?
So you're looking at the one on 1510.
Yeah, 1510. Okay? And especially if you got to break the news to somebody that has not been depreciating, you can sit there and tell them how much money was left on the table too,
For that year.
or prior years. Like I said, sometimes you have people come in that haven't had a rental for 10 years but have not been depreciating.
Oh, I see.
So that's what they lost out on those 2 years, right there.
Now, you can go back 3 years though. And find
You could
out
amend,
those
yes.
Returns, right?
Yes.
It's equal 3 years. So
Yeah.
It was
Once
3,
in a
it was
while.
at 10, 7 years lost.
Yeah.
It's still worth your while to go back to 3.
Yeah, at least you're, because like I said, you got to break the news to them. Let's go amend 3, because you sell that property 5-6 years from now.
recapture, you could be recapturing more than you actually depreciate.
Yes.
Something like that basically.
In as far as, I'm not sure I'm understanding what you're asking.
That's the part I was curious about. See, I didn't depreciate an asset, but then after I sold the property, do I have to actually recapture and treat as income all the potential depreciation I could have done?
Yes, that's what we were talking about earlier.
The IRS will do it for you.
That's
Ouch.
rough, and that's all treated as income, and you didn't even get the benefit
Yeah.
of
The expense.
the expense.
What?
It's not a true, let's say,
Me and David both feel like this doesn't seem right. It seems unfair.
but if you add all them
It
up,
seems like,
it's not like you put that whole amount in, a certain percentage of that amount to recapture.
If you go back,
Let's say he lost the first 10 years, and it's
Mm-hmm.
3 something a year, or whatever it is. Okay, let's say it ends up being $7,000. You don't put $7,000 to recapture as income. It's only a certain percentage of that 7,000.
No, whatever depreciation should have been taken that was not is in the recapture.
but the only way you say that is your percentage on capital gains is different than income.
Okay, so that's what it is.
That's not a hot thing.
Right, so it
You're
wouldn't
not
be.
paying for it.
It's, you're not really comparing apples to apples,
That's what
dollar
I'm
for
trying to
dollar.
say, yes, no, I wasn't saying it.
Yeah,
right.
so-
Recapture is
Because
$10,000.
they're different dollar.
30% of that bracket, you may be taking it as 15% bracket.
And if you have carry forward
the recapture
losses,
taxed.
it may help you out.
So, all right. Now, personal use. We're going to go to page 1512. Okay. Personal use of a dwelling unit, including vacation home. In the case of any personal use of a dwelling unit, including a vacation home that is rented, the expense must be divided between rental use and personal use. Okay. In general, allowable rental expenses will be no more than the total expenses multiplied by a fraction. Okay, all right. Only rental expenses may be deducted on Schedule E. Some of the personal expenses may be deductible where? On the A. All right, if deductions are itemized. The determination must be made as to whether the dwelling used is considered a home. The amount of rental expenses that are deductible may be limited if the dwelling is considered a home. Whether a dwelling unit is considered a home depends on how many days during the year are considered to be days of personal use. There is a special rule if the dwelling unit was used as a home and it was rented for less than 15 days during the year. Okay? There is, and now wait till we talk about the problem. Let's see what it is. There's a little quirk.
By way of home, I mean
Texas.
like a resident, your personal residence.
Yeah.
So if you own a house in Pinehurst, as long as you don't rent it out for more than, or as long as you rent it out for 2 weeks, you're fine.
Yes. And the best example of that is Rochester. When they have, Oak Hill has the major golf tournaments. All those people around there to get out of town rent their houses to the players.
So they do like Airbnb or something like that.
Yep.
Pinehurst does this.
And I coordinated it for when the Ryder Cup was in Boston in '99. That was one of my jobs, was to put the two together. Most of those people that lived in Brookline didn't have a mortgage, so, but some of them didn't. want anything to do with it. So they had these huge multi-bedroom homes in the area, and they got a pretty penny for them for 2 weeks because the team players, whatever, came in with their entourage and rented them. Less than 15 days. What was that income?
Well, if it's less than 15 days, it's just another. No, it's not income at all.
Free and clear.
It's free and clear. Yeah, because it's less than 15 days, it's no income.
So,
Otherwise, it would be rental.
yep. Okay.
So if we rent our lake house out for less than 15 days, 10 days a year, we don't have to do that.
No.
We have no expenses.
Okay. If a dwelling unit was used as a home and it was rented for 15 days or more during the year, report all rental income. And down on the bottom of 15.3, you were asking about that. Since the dwelling unit was used for personal purposes, the expenses must be divided between the rental use and the personal use as described earlier in this chapter under dividing expenses. Okay.
Where are we?
Out on the bottom of 15.3. We were just talking about that 15-day threshold.
Isn't 1513?
Or excuse me, 15.13. Yep. Okay. Now, I'm going to point this out in the Schedule E, and there is mixed feelings about this, okay, amongst us. On the rental, on a Schedule E, okay, we have listing our properties, you know, and again, Schedule E, we got this one, you know, each one can have 3 properties or expenses and stuff like that. Inside, when you go to the rents received, if you hit F9, there is what they call a rental A worksheet, part year rental ownership worksheet, okay? Do not use that. All right? So stop clicking on it, Patrick.
I'm looking at schedule what?
Schedule E, okay? Yep. The reason I say that, it creates a nightmare, because if you don't do it correctly, you're going to have this return that turns bright red on the Schedule E, and things don't flow the way they should, okay? I'm going to show it to you.
Say that again.
And why do they have it?
We're on schedule E,
Okay?
and we don't put it where?
Okay, so go into our line 3 under the A, hit F9. There's this little thing called a rental A worksheet. All right? And it's really intended for what?
Rental part year rental.
Yes, it's really intended for personal use, okay? Because why, what does it calculate? It calculates a percentage, all right? Because percentage of time, year, or property rented, okay? It's nice if you do it, but if you don't use this in corporation with the Schedule E correctly,
So
the
what
Schedule
would
E
you do?
turns red.
Would you stay out of that and just put in rents received and that's it?
And just calculate the percentage.
Where's the percentage calculated?
You'd have to do that manually.
Oh, okay.
Yeah.
So my tax preparer would do that.
Yeah.
So, whoa, so it's good. So you wouldn't use any of those forms?
I wouldn't use this one. I'd use the Schedule E.
Just work right off the schedule.
Yeah, don't do this one, because now once I did that, once I open that and I go back to my Schedule E, okay? See all these turned yellow? You know, these are green. But see how this is
So you
each
can't
color.
put multiple properties.
Well, no, it's not as much that, but now I can't enter anything on it. It creates a conflict. In the
Right,
record.
but if you open that schedule, but if you
Yeah,
did.
do not
you
do
could
it.
Write it.
Because then what you find is once you do something, you're going to come back to the E, and all these boxes are going to be red, and it's going to drive you absolutely nuts trying to get it fixed.
So the bottom line is for rental properties, don't use the worksheet.
Don't use the worksheet. Just stay on the Schedule E and make sure you calculate the percentages.
So again, would you use a different schedule E for every property?
No, you can put 3 properties,
Okay.
A, B, and C.
Oh, yeah.
Yep. So if you look up at the top, I'm down below it a little bit. We have a way to do it, you know, with our addresses, the type that it is and things like that, okay? But don't use that rental worksheet. It just creates headaches, okay? All right.
So basically, we just give you the property address, the schedule E, like lines 5 through 19, and you take care of it.
Yes. Yep. Okay. If there's anything that needs to be detailed in there, I'd rather have you stick it on a scratch pad attached to the square on the Schedule E than I would have you trying to get into that. And the reason I say that is because I have people that poking around the class and stuff will end up on there, especially for the final if there's a rental property. And, you know,
get wrong.
Well, like I said, it just, you know how you've been trained now to look for red when you're doing a return? You're going to think that, you know, you're going to think that your rental property turned into a murder scene.
So let me ask you this, say you have a property that's only certain, you know, like sometimes they close it between November and May. You can't get into the properties, they're like it's a vacation property.
Oh, like a seasonal type place? Okay.
And say you rent it for a certain period of time, now, does the percentage usage based on the usable months of the year or the whole 12 months per se?
No, the usable months of the property. If you have a property that's somewhere where that it has to be shut down or closed or whatever,
Right.
you know,
So
that's not affected.
That's 6 months or 5 months
Yeah.
is out of the picture. So if you rent it more than whatever percentage it has to be of personal use, you've got a shorter window now that you can work.
So if you only rented 5 months out of the 6 that you can only have it open, the other 6 it has to be.
Yeah, it's still 100%. It's just,
Right.
it's for personally, it's versus, you know,
Versus personal use.
yes. Because can you materially participate in those other 6 months?
No, you
No.
shut it down.
You can't.
You could go by and look at it, make sure it's safe.
Yeah, granted on that, yeah. But what I'm saying is that that piece of property is fully rented. It's not where it's any other partial.
Well, what would constitute fully rental? If, say it's a vacation property, you rent it out weekends and stuff like that, and you only have 5 months of the year that you do, what would be?
Are you renting it? Are you using it at all personal?
How do you go check on it?
No, but what I'm saying is it being,
We could,
in that 5 months, are you
Yeah.
using it all personal?
yeah, one,
Okay, then you'd have to do a percentage,
right.
irrelevant of how many months of the year that it's rented.
So it would be a percentage on what it was rented out at.
Yes.
So if you ran it out for 36 days and you had it for 5 months and you could have used it personally for
Yes.
even if you didn't use it, you'd still have that capability to use it.
Yeah, what I'm saying is I'm putting aside the months.
Right.
I'm saying when that thing can be rented, that you can materially participate, if that's all you're doing with that, then that's, you know, what we're looking at. That's the pie we're looking at. The other part, if it cannot be getting into, you know, like properties and stuff like that. So, yeah,
It's
because
not then considered personal use
exactly.
because it's not, you
Yeah.
can't rent it during that time.
Yeah. So, all right. Let's see. 1516 limits on rental losses. If there's a loss from rental real estate activity, 2 sets of rules on page 1516 may be limit the amount of loss that can be deducted. All right. At-risk rules limit losses from most activities to taxpayers' amount at risk in the activity. Treat any loss that is disallowed because of the at-risk limits as a deduction from the same activity in the next year. So what's that mean? Yep. So, okay. All right. And that tax-wise does that for you. All right. But that's something that you need to be knowledgeable of, because again, if I have somebody come in that has some things that are returned that I did not do or is not in the system, I have to go find those. Okay. Passive activity limits. Because rental income is generally considered a passive activity, rental losses are usually limited by passive activity loss rules. Losses from passive activities are limited to the income from passive activities for the current year. Disallowed passive losses, those above the limit, can be carried forward to the next taxable year. A similar rule applies to credits from passive activities. So again, you know, tax-wise calculates, but it's something to make sure that you're aware of when you're looking at a previous year's return. Okay.
So if we go to you as a tax preparer and you've done last year's, we do, well, previous year, and we do last year's again, you already have a carrying forward.
Exactly. Just like what we see when we did the capital gains with the $3,000 loss.
Right.
You see it in there and it carries forward and pops right up so that you know what you have to use. Okay. All right. Okay. Let's see here. Okay. We talked about what royalties are. All right. So 1520. We're actually going to talk about that Schedule E that I just popped up there. All right. Rental income is generally considered to be unearned income. So what's that mean?
So I have to pay something.
Yeah, but what's the other thing it means?
You have to pay medical,
What's the big thing that always comes into play for most people?
Social Security,
Yeah,
medical.
yeah. What's the freebie? The refundable credit that's kind of a freebie.
Oh, you earned it.
Earned income credit. Okay?
So you don't qualify for that.
This means that rental income does not qualify toward the earned income credit or additional child tax credit. Remember we talked about this in 5 and I said I'd kind of come back to it. I think I used the example of the individual with pretty low income, had a double, rents out the other half, showed a profit. What happens to earned income credit?
Lose it.
Yep. Okay. All right. Okay. Cash method. Most taxpayers use the cash method of accounting where income is reported when constructively received and expenses are deducted in the year paid. A taxpayer using the cash method cannot deduct uncollected rents because they have never been reported as income. Okay. So if you got somebody that's not paying the rent, can you report it as income? Okay. All right. And that was my gentleman I was talking about earlier. He had to evict 2 people in order to sell because they weren't paying rent. That's why he wanted to get out of it. Now all of a sudden he's got kind of a double whammy. He wasn't getting the rent from the tenants. He had some legal expenses that we could do some things with. And now he had to sell the property at a profit and had prior depreciation and capital gains. So was not a good day for him.
Let me ask you this. Let's say you do the eviction, you have legal costs, you get a judgment of, let's say, $2,000 for unpaid rent. Because you got the judgment, you issue a 1099-C for cancellation of debt. You get a deduction that way. Get a judgment, nothing for it. Can't get bugged from the stone.
I'd have to look deeper into that one. I'd have to look a little deeper in that one.
Well, look deep because it's coming up.
Oh, you got somebody that's on that horizon?
Oh, yeah.
Okay, all right. Well, I'll work on that one for you. All right. Let's see. We got qualified joint venture again. If a taxpayer and their spouse each materially participate as the only members of a jointly owned and operated real estate business. Does that classify you 2 back there? Okay. So you guys aren't in a joint venture? Does that mean you're not married?
Don't file a joint return without marriage.
Okay, all right. And file a joint return for the tax year. They can make a joint election to be treated as a qualified joint venture instead of a partnership. Okay? And why do we want to try to avoid 1065s and partnerships? What happens to 1065 income if we have to be designated as a partnership when it comes to the personal return?
Subject to self-employment.
Subject to self-employment tax. Okay? All right. All right. Shows a Schedule E there. Kind of has a bunch of columns and stuff like that. Basically what Mark did for you on each of the lines on the pages 15, 22 through 25, he just pulled it right out of the instructions for the Schedule E. Okay? And again, consistency. You know, we have clients that we've pretty much trained that they come in, they have their spreadsheets, boom, 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 boom. They're right like this, you know, as far as what is. Do you have supporting receipts? You know, they'll show their books, or we have the little books that we sell in the office that have all the little columns just like this, that everything's in there. Okay, because, you know, when you sit down with somebody and that has 30, 32, 35, you know, rental properties, you know, the last thing you want to do is, you know, have them kind of going like, you know.
What if we bring it in on, all the receipts are scanned in on USB? Is that just as good? As long as you can.
Yep, as long as you can sort
Buy
through.
property?
Yep, you know, as long as they're orderly, you know, because some of those, it's kind of, you know, when you get some new clients and they come in and, you know,
That's true.
yeah, and the other one is, and I think I still have it. Let me see if I still have it here.
So if you scan it in by property, do you also want to scan in by advertising, by repairs, by this, by that? Does that necessarily have to happen, or?
Yeah, I mean, at least, you know, somewhat categorized is always appreciated.
So what you can do is you can scan 20 expenses in as a PDF expenses on that property. And then you scan in all the county, city, and property taxes in on another PDF. So then you have it broken down by PDF.
Yeah.
All right.
You need QuickBooks.
No, we used
By
to.
hand anymore?
What's that?
Can't we do it by hand anymore?
He said you
Sure.
can bring it in a
Down and then-
spreadsheet. But it's easier to carry it on USB than it is to bring it in the pages. But when we do that,
Yeah, I'll have to look and see if I can find. Wish I knew where it was.
so that's for being organized.
No, it's the cloud here because it's an old picture that goes back several years. There it is. Client that I had goes back a few years. I got him to do a system. The snowball that's in the middle of the desk there, his filing system was Ziploc freezer bags. And at least they were written in a Sharpie on the outside, but he just kept stuffing them in there. So I charged him for ironing to get the receipts out, because that little mass of things, that's his receipts from his business. But see, they're in Ziploc, so I was able to start at least.
By property?
How do you? No, he was self-employed. At least you had
charge
cash.
for stuff by the hour, right?
Can't really. I mean, when you're doing the tax return, you know, eventually he became one of Maria's bookkeeping people.
You kidding?
No. Okay, this is the way it came in. And he used the same Olive Garden. I think he still uses the same one. But the Olive Garden bag, that's his briefcase.
So he's cheap over here.
So, and the garlic, and there's still the strong smell of garlic from the Olive Garden bag. But see, there's his freezer bag.
He works for you guys then?
No.
Oh, Maria.
Maria does all the bookkeeping. She's part of the business solutions side. And so, you know, she now has him. So, and he used to do a lot of work for the city on zombie properties. And he wasn't given 1099s, but he was paying these people. And so all of a sudden he had no way to justify anything. So there's several years he was paying self-employment tax on stuff that he couldn't deduct. But he didn't have the money because he'd given it to people to help him. And had no way of going back to recapture it. So, but like I said, the biggest thing with the categories and making the transition is each person's going to have their own filing system per se. The biggest part is making sure that they get that filing system is consistent and that you guys are on understanding of what's in there.
The biggest problem is the receipts keep breaking so quickly. So
Yes.
don't phototype it and scan it.
Yeah, I think
You
I've,
have that app, you said you can actually develop.
Yeah, it's in there.
an app.
it's in there, isn't it, David? The receipt thing? And you can sign up for Receipt Bank if you want
There's
to.
also a document image thing that I don't quite understand.
It's a document scanner. It's designed, if your phone's set up right, to instead of making it a JPEG where you send us a picture,
Okay, you get the PDF.
makes it a PDF. Because like I said, in the Apple format, if somebody takes a picture of a letter and sends it to us via email, this is how big it looks when you print it out. It's literally the size of this screen, because all you get in the image when you open it is about that much. So I see the IRS or New York logo, that's all I see. I can't, you know, otherwise I have to make this thing.
So you have to do the scan document.
So you're still, with the document imagery, you're still taking the picture with the phone,
Mhm.
it just puts it in a different format.
Puts it in a format that's easier to be
Rather than JPEG.
transferred.
So something that is like an 8.5 by 11
Yeah,
document.
if I want to
you
take a picture of this.
that Versus like a receipt from a restaurant, you use the receipt
Yeah.
collector. And then on the back end, like, how is that all organized that I see what I've got in there?
Well, that's the thing that I'm working on right now to make sure it's secure with TaxWise.
Okay.
Okay. That,
Tax wise will be able to read that.
what's that? Well, just a second. Okay. That's the thing that I'm working on with TaxWise, because if they're a prior client, we'll be able to have on the app a link that then is theirs. Have you ever used Dropbox?
Yeah.
Okay. As opposed to Dropbox, if you have Dropbox and somebody puts something in there, they can go in there and see everybody else's Dropbox.
Yeah.
Well, this is set up to be more secure so that any prior clients, they go in there, they have their own portal to drop it into a folder for you.
Like a OneDrive.
Kinda, because again, we have to create more partitions. Because that portal, at least for you, you have one spot to go to. You know, with Dropbox, you'd have to have a Dropbox for each client and then be able to log into each one of those Dropboxes.
Right.
This is basically if you have 50 clients, it's taking all their Dropboxes and put it in one spot, but there's partitions so nobody can see the other ones.
Right.
Plus, it's in a tax-wise thing that my understanding, again, from what I've seen, I haven't seen it in motion, makes it much easier to transfer stuff into tax-wise.
But as I'm the client, I'm collecting all these receipts, right?
Mhm.
Do I see the numbers that are totaling up from those receipts based on what I plug into it?
As long as you categorize it, yeah.
Categorize it, and then you put the amount in.
Mhm.
So it's almost like when you go to deposit a check at a bank.
Yeah.
You're
Yeah.
putting what account do you want it to go to, and what's the dollar amount,
And then you take a picture of it.
and you take a picture of it, and it tags all that to that.
Mhm.
Okay, but there is an area where I can go in and see the total of my
Mhm.
receipts too.
As long as you've categorized them, yes. As long as you've assigned them to a category.
Okay, what's that button on there?
I'd have to take a look.
Okay.
You gonna give us a course on that one?
Sure,
How to do all that?
sure. I'm thinking about making up a video on it, so.
I'm telling you, everybody I talked to about it, they like the concept.
Yeah. So I tell you what, I mean, and again, this is editorial for me. I'm kind of a sponge for information, and I just happened to stumble on this as a free video to watch this guy present. And I've always been curious about doing an app for EG Tax, but a lot of it's cost prohibitive because
You have to pay someone to rent the app? Is that what's got?
a lot of it's cost prohibitive because when I did the initial search, if I found somebody that would do it, it was going to be $5,000 to $10,000 up front, and then a monthly fee to maintain and do all this. Okay, so I found this company just by doing a free webinar, and they're out of Great Britain. That's the only downfall. So a lot of times I'm up at 3 or 4 in the morning so I can catch them during their business days. But they were able to set it up for us, and there was no upfront, and they charge us 199 pounds
To do
monthly. Yep, all month. Yep. So which works out to $149
A month.
a month. Which
Isn't it the other way? Should be the other way.
no, it's $149 a month. Yeah, it's the other way. Yeah, no, it's 199 pounds, and we pay $149 a month. Is the way that the conversion works. So, well, that's what we got locked into. So that's all I know is what the dollars are. So
So maybe we need a course on that.
oh yeah, there's a wealth of stuff in there, and
Now,
I'm still building the back of the house on it too. So
okay, so as far as maintaining, they're gonna do all the maintaining upgrades for that one?
Well, there's a lot of stuff I have a dashboard for that I can do in the back. Like we've developed 2 spots between that and the new website that I'm doing for Esther so that she has a place for a blog. You know, she'd never had that before. And it's kind of an extension of the radio show. But there's a lot of stuff that I can do back of the house where we can put links to the website or things like that. So it's the way it's set up and the way I designed it is to be very interactive between the app and website, because obviously a lot of times you want to drive people to the website. Better way to do it than for me to pay somebody to do search engine optimization. I mean, that to me is, I don't see any value to that with AdWords and all that stuff because, it just doesn't. But I'm learning code as far as apps. And the part that I have now is that I can drop into my website that as soon as somebody on a smartphone searches and opens our website, it pops up to have them load the app. And then once I have them on the app, I now have the capability to do push notifications where up in the top bar, if I send out a message, they'll get a little red EG right up there where it shows that you missed a call or you got a text message or whatever. And I can say to them, corporate taxes, March 15th, so.
Can you see their location?
A little bit, yeah, a little bit. So, and the mileage tracker works pretty good. So it's nice. It's
So
got
you know,
lots
the
of-
mileage tracker, you have to input it yourself,
No, you can just turn it on and off.
GPS.
That's the key. You gotta go in and turn it on.
Well, yeah, you got to turn it on. It's not automatic.
I
So,
tried to turn it on.
yep.
They do anyway, so.
Yep. I was fiddling with it this morning. It was a little off. It didn't show 2012. It showed something else. So,
You have
All
a
right.
smartphone? They do.
all right, let's take a 5-minute break. We'll stop for a second. Okay.
Actually-
And then we'll come back. All right. Okay. So we were looking at, we were on 1521, we were talking about the Schedule E. And as I said on there, that Mark was nice enough that rather than what we kind of saw when we did the self-employment, that he basically just took the instructions right out of the publication for rentals and put it right in there so that we can talk about each of the lines. And they refer to each one of them. Okay? So, you know, again, talks about general instructions for lines 5 through 21, which, if we look at 5 through 21, what is that? It's all of our lines of expenses. Yep, so on 1524, it says there, it has each one of those that we can kind of talk about. It talks about different things, especially one on line 6. You can deduct ordinary and necessary auto and travel expenses related to your rental activities, including 50% of meal expenses incurred while traveling away from home. In most cases, you can either deduct your actual expenses or take standard mileage rate. You must use actual expenses if you use more than 4 vehicles simultaneously in your rental activities, as in fleet operations. Okay? You cannot use actual expenses for a leased vehicle if you previously used the standard mileage rate for that vehicle. Okay? And it goes through there that it talks about all the different things that you can deduct as far as expenses for the rentals. A lot of times when I sit down with somebody that's new to us with rentals, they don't realize that. They don't realize that they can use business expenses. Okay, Patrick always talks about he stops at Home Depot every time he comes up here. So that's where the mileage tracker is going to help you out because they can say what you're actually doing up here. All right. Okay. So again, going through those, great little thing to have as reference because when you're talking to somebody, it's ideal to be able to sit and use this publication or the form as an interview because a lot of times, you know, hey, did you advertise? Oh yeah, I had a tenant move out. Put some ads in the paper, whatever, you know, did whatever this or that, you know, start looking at those different things. You know, did you drive?
Let me ask you this. Now we got Craigslist and social media. It's free, but now you need a phone to do that. You deduct the phone.
If you're using the phone for it, you can't directly relate it, but you could probably do a percentage of your cell phone,
So
like we've talked about self-employment. Yeah. Yep. All right. So we have all the different things that are on there. Again, depreciation's in there that we'll talk about. Okay. Okay. All right. So what we're going to do is work on one of the problems out of the workbook. Okay. All right. Oops, I got logged out. Hold on one second here. Okay. So let's take a look and we'll work on Nancy Jones. Okay, that's problem 15-1. All right. She's got a bunch of things going on here. All right. And one thing that does, if you look in the workbook on page 201, what does she have? 201 in the workbook. Yep. And where's it coming from? Yeah, rent subsidy. A lot of times we'll see these. Yeah, so where somebody's, you know, the county or the city or whatever is paying part of the rent. Okay. Or that maybe it's in that property. All right. Okay, so let's work on putting that one in. All right, so we'll go ahead and start a new return for Nancy. All right. Okay. And we have Nancy Jones. Okay. All right. Is this how you do your homework all the time, Patrick? Okay. All right, she's filing single, no dependents. Feel like you've typed a few main info sheets in your lifetime now? Okay. All right. We'll wait and see when everybody's got their we'll wait and see when everybody's got their main info, and then we'll go through the rest here, okay? Okay. So on 15-1 Nancy Jones, let's take a look at her bullets first. So we kind of have a sense what's going on in Nancy's life. She filed a 1040 return last year. She itemized last year and has a state refund of $342. So what are we going to do there?
Did she have any credits?
Nope, single. So there's nothing as far as any kids. So
Put it in the,
line 10.
line wherever it-
Yep, line 10 there. All right. Talked about refund electronically. She had some gambling winnings, which we see on page 199. She's got a W-2G, and she has receipts for $1,000 of losses in lottery ticket. Okay, so we'll be able to handle that. She had health care for the entire year, and she has a rental property. Fancy that with the chapter we just did. Okay. All right. So we'll come back to the rental. Let's go take a look at her forms here. We got a W-2G. Gambling goes on our line. Which line's gambling go on?
I'm trying to find this.
Line
Well,
20.
but she itemized, so she puts the losses in Schedule A.
But if we have a W-2G, we can start there on line 21. Okay.
Other-
Yep. So we go there, the first box, we hit F9. We do have a W-2G. In this case, we have a W-2G, so we can fill that out. What's at the bottom of the W-2G, David, that'll help you get it to where it needs to go? In the computer, not on the paper form.
Oh. I didn't put it in.
Okay.
Probably the losses.
Yeah, there you go. Okay. All right. And she won this from your local lottery. All right.
So the W-2G though says 659,
Mm-hmm.
line 1. So what's the 1,000?
That's her losses.
Oh, I'm sorry.
Okay. But what about her losses?
It's some limited to her, it's
So how much can I put down in that little box?
659.
There you go.
Which line is it?
Scroll down on your W-2G all the way to the bottom.
Again, what looks like another income worksheet. So I needed to go in from there.
So if you're on your other income worksheet. Yep.
So I needed to hit F9.
There you go. What do you got in there? All right. There you go. Yep, now scroll down the bottom of that next. That's what we're talking about. It doesn't, well, can we put 1,000 there? Though?
No, 659.
There you go. Okay. All right. Okay, so we got our 659 in there. And if you want to clean up, if you didn't already, that she had health insurance all year long. Okay. All right.
So you didn't put in all the other stuff for the W2G?
You can. I mean, obviously, there's a lot of squares, but big thing is the winnings when she won it. Yep.
And you collect, you check the taxpayer at the top too.
Yep, exactly.
Okay. And so healthcare, she had for a full year.
Okay.
Okay, so you took care of the lottery.
All right. Next thing she has is some interest income. And that goes on what, Mark?
The worksheet. So we have to go to the, first you have to go to the Schedule B.
Mm-hmm.
And then from there, you have to bring up the worksheet.
Exactly. So it goes on the Schedule B, but does not go directly on the Schedule B. Goes on the Schedule D, but does not go directly on the Schedule D. Goes on the 4562, but does not go directly on the 4562. Okay? All right. So she had from First National Bank. We had, let's see, she's got a couple things going on. She had some interest income of $411.11. And what else did she have on there?
Savings.
Yeah. And like I said, I usually,
You do a separate line.
I do. Exactly. Usually what I do is this.
You're in the
First National
worksheet.
Bank.
You're in the worksheet, not on the Schedule B.
That's right. Remember, so, all right. Because it goes on the B, but not directly on the B.
So you
Okay.
just put the minus 1321,
Under the state adjustment.
right? But you don't need to do anything in box 1 or 3.
We have to put the income there
Oh, yeah.
because it's taxable on the federal. Yep. And how do we know we did it correctly? Shows up as taxable on the federal, and it'll show up as a subtraction on the state. Okay? Yep. Okay. All right. Next thing we have on 200. Yep.
State, we put the negative.
Yep. State adjustment, put negative for the amount because is the interest taxable on the state? Okay. All right. Next thing we got what? W-2. All right. So we're going to go take care of the W-2. And again, check the taxpayer, get in that habit. Like I said, the most important part about checking taxpayer spouse is going to be on retirement accounts because of that $20,000 exclusion on the state, but it's just a good habit to get into it. Okay. And she's a hairdresser for Gina's Hair Care Supplies. Okay. Okay, 69 North, oops, Street. Okay. And she has, we can see 1, 3, and 5 are the same, so we don't have any adjustments that we would have to do. All right. There was a retirement plan, so make sure you're checking that box. Why is that, David? Why do we want to make sure we check that retirement box?
The box 1, because she over 59?
No, we're talking about on the W-2. Remember you were asking me the other day?
Oh, so it flows through and reduces.
Just in case we're on that IRA worksheet, we got to make sure that we understand that she is covered. May not participate, but that she is covered.
I did that wrong.
Okay?
Oh, no, maybe I did it right. Because I had to overwrite it, because the numbers did.
Yeah. Let the computer calculate it. Okay?
Yeah, because the computer calculates it at 2371 and 554, and it's wrong. So I overwrote it and put put the rate in there, don't do that.
No, just leave it calculate. Okay. Remember, the state ID is the same.
Is that just for this problem, or would I do that with a live customer?
If a live customer's is incorrect, they need to get a corrected W-2. For this case, we're just gonna let it calculate, okay? Because if it's wrong in the calculation for the year, that means the W-2 is wrong and needs to be corrected, okay? All right, so we have that. All right. Next thing we have is mortgage interest. Now, this is where I'm going to talk a little bit about this, and this is kind of where I'm going to get back on my soapbox about the partial rental A. Okay? So she owns a what? When we're talking about her, she lives in half the house, correct?
Yep.
So it's a double or a duplex, okay? On her Schedule A, what do we know? Remember we were kind of talking, I said I'd come back to these, okay? We've already been kind of seeing the 8829 from the home office, where, you know, it brings it over for us if we use the home office because it's based on the percentage, okay? Real estate tax remainder from partial rental worksheets. That's if you use that funny worksheet I told you not to use, okay? Because it's nice that it carries that over, but like I said, from year to year and making sure that things happen correctly on Schedule E, do not use it. That's just my opinion. Some people love it because they can put that 50%. But for me, like I said, I get too many times where I see people get done and then all of a sudden their Schedule E turns red and they're, you know, in a panic. And it's one of those things that it's kind of like the Medicare donut hole. Once you fall in it, you're in it. Okay, there's no way out of it. All right. So basically what I want you to be able to do on this is we just have to know to calculate it. Okay. So we're going to put in, first of all, we're going to do her Schedule A, and we got on the bottom of page 200, we have her 1098. What's it show for our taxes? Okay. So we can do real estate taxes on our principal residence. Yep. So we can just take, you know, if we want to, and do our F5.
What do we, yeah, which one we on?
That might six.
Six, the second one for rental or not?
No,
Okay, on the principal residence.
we're just going to do principal residence.
All right,
Okay.
Still put the T in there?
You can.
Can.
Okay.
that's-
What else is on our 1098?
there's also
Interest.
Mortgage interest and house insurance. Can I do anything with the homeowner's insurance?
Except later when you
Well,
schedule E.
Yeah.
Exactly. Okay. So mental note, and that's why I say, you know, your system of where you're putting stuff in, you know, because typically personal homeowners insurance is not deductible, even on a Schedule A. Okay. But if I'm paying the insurance for the entire double, I can take half of it on the rental. Okay. First thing we're going to have though is mortgage interest. We talked about it again. Yep. I like to use the calculator so that they see what I'm doing.
So,
I go in the square, I hit F5, say, okay, you had $11,500. We can take half of that.
what line do you want?
The home, line 10 that says home mortgage interest and points. Okay. But like I said, hit the F5 and go right in there. Okay. All right. Is there anything else on that 1098 that we can put in on the personal side? No. Okay.
Gotta
just
do
have-
50% of that 11.5?
Yep.
So we mentally calculated it, right?
Well, like I said, and that's why I just said, if you hit F5 in there, you can use the calculator and show right in front of them that you did it. Okay. All right.
If it's like that, they see that you're doing all that?
Yeah.
He's using an office. with-
All of us have double screens, so they see exactly what I'm doing. So they see my screen facing them as what is facing me. So, and that's why I say there's certain things I do. I wouldn't call them theatrics, but it just shows the attention that I'm paying to what they're doing. I'm saying, okay, you have this, I'm going to take 50% of it, and they see me calculate it and understand that that's why that number is in there. Exactly. Exactly. Okay. All right. So back to our our little bullet pages, our bullet points on page 197. Okay, we got everything pretty much taken care of down to the property. So, Schedule E. I go to my 1040 page 1. And I scroll down to line 17. It says rental real estate. Hit my F9, and what's in there? My Schedule E. Okay?
What line are we on page 1?
17.
So I got real estate, royalties,
Yep.
all that sort of stuff.
Okay, so once I'm in there, I have my Schedule E. All right, so I'm going to take and did you make any payments that you would require 1099s? We're going to say no. Okay, nothing was listed here, all right? We have her properties, okay? So we're going to go by the letter A, okay? And what is her property address?
65.
Yep, where she lives, right? 65 Pinewood Avenue. What's that? No. That's only if you're going to pick A where it's something other. So just kind of go along here, okay?
Well, so you just went down to address. You didn't even put property like.
Well, what does it say there?
It says type.
If type A, is it another? No, okay. So as I said, capital A, under address, we're going to put the address in.
You can put the whole address all in one line?
No, it's 2 spots, 2 lines for it. Okay. Now, on the type, now we're going to go back up and look at the top. All right. What type of property is this? Yeah, multifamily. So we're going to put 2 there. Okay. And it was where it says type. Okay. Just put it down underneath there. Fair rental. 365. Okay. All right. Don't worry about the personal. That's if we had something where we're doing it, but we're not going to worry about that right now. All right. So line 3 under property A, make sure, because there's 3 properties on each one of these, make sure you get in the right column for the property that you're relating to. So the address up above matches to the numbers that you're doing. Okay. First thing we're going to do is rental income. Where does she get her rental income from? Yeah, so go into that box 3 and hit F9 and tell me what's in there. Okay.
You don't want to do that, right?
What's that?
You don't want to use those?
This is the miscellaneous.
Oh.
Okay, because if I do that and I put in there under box 1, she got $8,545.22. I like to use them just because of the fact that it's a rent subsidy or things, because sometimes what happens is what? Part of it might come from a housing authority and part might be coming from the tenant. And if I just have that number lumped together, I don't know.
Oh, wait a minute. We're on line 3. Rents received. And you don't put in the 8545?
Well, again, we're going to get in the habit of hitting the F9.
At the 85, under 8.
Yeah, so don't put the amount in there for this one, because what did she get? A 1099 miscellaneous on page 201. So hit F9,
Got it.
and what's in there?
Scratch that, rental worksheet. Miscellaneous.
Yeah, and again, the reason I'm saying that is I like to do it that way, because if she says I got $10,000 in rent, that's great. If something comes back, I have to look at that return, and then I get confused because why? Well, she's got 8545 coming from a rental authority, and the other half was paid by the tenant. I just got them lumped together. But if it's just a case that you're just collecting that sole amount of rent, just put it right in there. You don't have to do the 1099. But again, I like it for detail because it gives me a paper trail. Okay. All right. We got the city rental authority.
Yeah, EIN. Looked like quite a bit of digit long in the book. Is that right?
Yeah, might got a little digit long, so just cut it off. All right. And okay, so we kind of get everything in there. So once we get that in there and Schedule E, select the parent property. Anybody click on that and see what happened? Yeah, it gives you a little pull-down menu, doesn't it? Okay. And I think I talked about a little bit in depreciation, but we'll come back to that. So now we got it linked to our parent property.
Do we have to show us for the taxpayer? Yeah.
Receipt shows up.
Yep. And like I said, for me, I like to have that in there because it gives me a trail, especially if the rent's divided by two sources. Okay? So now we can go back to our bullet points because we got all our tax documents in. Oh, do we? What's one thing we could probably hit on a tax document right now so we don't get it lost? What did we already do? What form did I already use for her? No. Tax document, something that she brought in. No. What else? You're on the right page. Just go one down. Yes. Because what did I already do with that tax document? I gave half of it to her personal. Where am I going to put the other half? On Schedule E. So that's where I would come back and do that right now. Okay? Yep.
So again, we just do the half, right?
Yep. So we're going to go down. First thing we got on that document is mortgage interest. So I can go to my mortgage interest paid to banks. Again, I like to use the F5 so people kind of see that I'm, doing their 50%. We got that in there. And then taxes.
Now insurance, you could only take half of that, right?
Exactly. So if I go up to my insurance line, I got my $700. 50% of it puts it right in there. Okay. So I've kind of cleaned up that document, if you will.
Calculating, I mean, what do? You type in the amount times 0.5 and it's what you come out?
Yeah, and then hit enter. It's not working?
You gotta click on.
So that house insurance.
Okay, so I hit the 10, put up by
Times that house insurance, like what's the time?
Yeah, it just goes under insurance, half of it,
Okay.
350.
Okay, so we'll put
You hit too many
The
enters.
only one I'm not sure
The
about
other
is
thing
what to do with the
we're gonna
garbage.
get is half for insurance.
And the other, what else is on the 1099?
So,
Oh, the user fee for the garbage.
Okay.
So that is,
I mean, that's not a professional service.
no, those, we have to take a percentage of them on the Schedule A.
Okay, so let's start working on our bullet points, okay?
So you're gonna have to take half of the utilities.
Let's start working on our bullet points, okay? First thing we got on the bullet points is the house. She bought a house, okay? But this is where you guys are gonna have to do a little work, okay? Because why?
oh, we're gonna get all the back.
You gotta do the back depreciation. But it's the same, you can just calculate based on the number of years.
Mm-hmm.
F5.
So.
All right, so we're gonna go in,
We're gonna do depreciation.
okay? We're gonna go in to line 18. We're gonna hit F9, and what's in there for us?
Runway worksheet.
Depreciation.
Worker.
There you go. And where's depreciation go? Does it go on the 4562? It does, but it doesn't, okay? Business or activity to which this form relates. We can say rental, but because I wouldn't say property A, because what if we have more than one Schedule E? I would put the address.
What was it?
65 Pinewood. And put that up there. That way, that header is for that rental property. And it just makes sure that that's cleared. And then I can go down to my description of property, because what does it say in there? In the words we love to hear, for accurate computation. Okay? Go down below that, hit F9, and we get our asset worksheet. All right, so we're in. Now, description of property. Exactly. I would put, I usually start out by putting duplex or double or whatever, and then I put the address.
Wouldn't that be asset type? Would you put duplex and asset type, or would you put?
No, this is for the description. And again, it's for me, however you like to have the description. It just helps me with knowing what I'm depreciating. My asset type, what type is it?
Real property. It's not
Real property, resident.
Yep. Okay.
Take place in service. There we go.
April 4th,
2006.
6. Okay. Then when I get, if a rental asset, select the parent property, what comes down? Yep, there's my little A. What's that 2 in front of it mean?
Double.
Yeah, it's a multifamily, so it shows my code. Okay. Down under the cost basis, what is my cost? What did she pay for it? From the bullet, it says $135,000.
Did you put gas in that little box up there?
Mhm.
Property is real estate.
Yep.
And then
Okay.
did you pick real property?
Real property residential rental.
But it's not pre-1987.
Yeah, it's not pre-1987 property. Okay. On 1A, the cost basis is what? 135,000. What's the land value from our bullet? And again, if you don't know it, 10% is usually the rule. Okay.
Where do you put that?
Land value, what is that? Oh, here. Salvage.
Yeah, 1B. Yep. Okay.
So that's what I was saying before. All right, so I got the land value in.
Now, 1C. What is this? It's a double. So for business purposes, what is my percentage? Do I get to depreciate the entire building?
No.
What am I going to depreciate? 50%. Remember I said we'd kind of come back to this and talk about it when we were doing rentals, okay? And now, what has it done for me on the rest? Okay?
That's on line for 1C, you put 50%.
Mm-hmm.
And you're putting that in the thing next to it on the left.
Right there. Yep. Okay. Because now what is my basis for depreciation? Exactly. Okay.
So
And what is my convention? Nope, that's my
It's,
method.
mid-month.
Mid-month, exactly.
This is the rent,
Yep. And what else is red on that?
prior depreciation.
Okay. So
So.
at this
okay, so
point,
it's a mid-year convention and
so we've had to calculate this because the house was put into service in 2006. So what was the first tax year that she would have done the depreciation? April 2006, right?
Yeah.
So that's our first year of tax return. Don't get caught up in the years because sometimes when you do that, you'll leave a year out. Think of tax years, tax returns. How many prior tax returns has she done for this property? 10.
That was the year one. So
Yep.
Okay, so let's say she didn't do the depreciation. She
Mhm.
got some bad advice.
Mm-hmm.
You still calculate it the right way?
Nope.
Put it in there, or you put in what she depreciated?
You would calculate prior depreciation, you put it in there
for the 20.
because it's going to help you in what way?
When you go sell it.
Exactly.
So you would do the same calculation.
Exactly.
Whether she depreciated it or not.
Exactly.
That's what I thought.
Yep.
Okay.
Because
Now, she came to you without any of that information. You'd have to do this to get to where she should be.
And the other thing, it doesn't matter whether it was done right or wrong previously. You're putting in the right information for when you go sell.
Okay. Yeah. Because, and again, that's where what's the description? Well, $2,200 a year that we could have subtracted off of income, she might have left some money on the table the last 3 years. Okay. But we'd have to see. All right. So we've done that. As it's done, we've calculated the prior year's depreciation. Now let's get into our expenses here. Repairs to the roof.
Except one of the
So,
things there is red on prior depreciation on the federal agency. What do you-
Put it, yeah, just put it under there.
You put the same number, both of them.
Yep. Okay. So we're on expenses. Repairs to the roof. Is that a capital improvement? Or are we just going to put it under repairs on 14 on the Schedule E?
It's just repairs, it's just. it's not-
Yep. So go back to your Schedule E.
What is it?
I'm sorry, Mark. What's that?
Well, I would say if it's just repairs, it wouldn't be a capital.
Exactly. Okay.
But it's half of it, right?
Well, no. She lives on the first floor. The rental's the second floor, and the roof's above the second floor.
I love it.
So if it was a ceiling on the first floor, you can't do it.
No, I'm just kidding. You still have to do half. Yes. Okay.
Darn.
I was just to see if I could get David to think. Okay. Because the roof's not over the first floor. It's over the second floor.
Because you
Exactly.
have that. The advertising, you can do the full. The legal, you can do the full. Right. Not the legal and the advertising.
Okay, so we got that. Advertising. It's just for rental, 100%, exactly, okay? Legal fees, and in parentheses, it says rental. Yep, so that one's on there. So that's a full one, okay? User fee, and that's the city, Buffalo calls it that, all right?
Utility, yeah, but where do you put it?
Yep, just give me a second, okay? Go down to line 19, the little box that's just to the right there, hit F9. There's a little thing that says other expenses. And if you go in there, nice little thing, because what's it allow you to do? Especially if you have user fees that are multiple properties or whatever. So user fee, okay? And it's on a property A, so do I get 600 or 300? 300, okay? What's the next one that's there? I put water on this. I don't go under utilities because I like to see it here. Because that way I'm not typing in a whole bunch of different water things if I have more than one property. Same thing, 750 or 375, okay? All right, so we have that, okay? Back to our Schedule E.
What about the stove?
Well, she bought a new stove for the tenants on August 4th, 2016. It was $800. So what are we gonna do with it? Depreciate it.
Why not 179? Well, no, it's rental.
It's a residential.
Just, okay, all right. So what are we gonna do?
Well, that's the 2,500.
Well, now, procedure-wise, okay? So what are we gonna do? Back to our Schedule E, depreciation. We're gonna make a new 4562? No. I go over, click the asset worksheet on your tree on the left, the duplex, and then what can I do? Get the copy asset worksheet so it keeps it what? Right in my hierarchy, okay? All right. So I'm gonna copy the asset worksheet, and what do I got? Blank slate. So what are we gonna put in there? Stove, okay? And an asset type, what's the second one down when I pull down my asset type? Appliances rental. When did she buy it for him? August 4th, 2016. You don't want to do prior depreciation again, David? Okay, all right. My selected parent property. All right. Is it real estate? No. Okay. And how much was my stove? For the basis? $800, right? Okay. All right. So I put in my basis, what percentage is for business use? 100%. Okay. All right. Okay. What shows up down there, Patrick, that you were asking about? Go a little farther down on your depreciation. We've put everything in for asset type and stuff like that. What do we have down there? And what else shows up on section 179? What's the, is it eligible?
Other than 25.
What's it say on your worksheet? Where does it say no on yours?
This says a worksheet. It says no.
Eligible for section 179 election, no.
No. Why does it say no?
Because it's a residential.
Go back up.
I can take the special.
So what can we do? So what did we, Mark, you had a yes and we had two no's.
So I had property, real estate, residential rental. So
Yes.
Yes. And special depreciation amounts, I can have yes,
Yes,
because it's a new store.
exactly. Exactly. Okay. So we have it up there. Oops. Okay.
Where are we right now?
So are we going to take special depreciation?
50%.
Sure.
So where do you take that?
But the 79 is still not up, 179 is still not eligible.
That's correct. Okay.
Where do you think the special depreciation?
It's a yes box right underneath.
Right down here. So if you go down, it should be have two little red boxes.
Oh, yeah.
Okay. When we click yes, what's it calculate for us? Shows that it took half of it. And then what did it push up to the top? Current year and next year. Okay. All right. Okay. So I don't know, the answer key they may have not done this. That's one of those things with these answers with depreciation. When you start looking at the answers of the problems I sent to you, sometimes it depends on what you decide to do.
It does the special depreciation, plus
Mhm.
it does the other year. So you really
Yes.
get 480 first year.
Yes. Yes.
So you get to write off the whole 400, and then the other 400.
Well, you get actually 480 in the first year.
Oh, 480.
Because if you look up on line 6 for current year depreciation, what does it say?
What, $400?
The one you're on, the little asset worksheet?
Basis of depreciation.
Yeah, but you got.
No,
you gotta go
line
back
6.
To the 45.
In addition to 400.
I got 80. Oh, 480. I see.
Yeah, that's what I say, the 480. Yep, okay. All right. Also, what's next? She had a bathroom remodeled on August 16th, 2016. The remodeling was for the tenants. An $8,600 bathroom. I assume there's a hot tub involved and sauna and exactly. So we got another capital asset worksheet, okay?
Those are small and
All right, we're gonna call this one bathroom remodel. All right, okay. What type of asset is it? What's its asset type?
I don't
Does
know.
it still fall under the same?
Cotton gin.
Keep going down. See if there's something that pops up in the L's that you think might be appropriate. Mark, what do you see there?
Oh, see, leasehold improvements, residential.
Leasehold improvements, residential.
Okay. What does that, if we take a peek down below, what's that give us for our recovery period? What do you think it's going to be with the rental?
7-year old of the house. Yeah.
Same as the house.
Okay. She put that bathroom in service, I guess, if you will, 8/16/2016. Okay. What's the parent property? Is it residential rental? Okay. What was our basis or whatever the improvement or whatever you want to call that was 8678. What percentage can we take? 100%. Eligible for special depreciation?
Why not?
Well, Patrick, you're going to have to override the yes because it's not letting you do that. So is it available for special depreciation or section 179? No. Okay.
They can't take the depreciation, special depreciation.
No. Okay. All right.
So
Then what is the special?
As far as,
when you get it.
When do you get it? When can you use that?
well, it just
Like
depends
the last example.
on the asset types. Yeah, like I said,
Yeah, it's still
Is
working.
it Is it a value or is it?
Right.
Because it's part of that house.
the asset type.
So that's what makes it, if it's gonna go or not, is the asset type.
Mhm.
So if it's a capital improvement that goes to the building, you
And it
can't
has to be
take.
new, so.
That's a good point.
Okay. So we've done all this. Go to your 1040 page 1 and go to line 17 for me.
Zero.
What happened? Why is it not there? I got a loss on this thing, don't you think? What's your show up there, Mark?
917.
Yep.
Okay, 0.
Where'd it go? I don't have any income running losses. Was it limited?
Because it's not the schedule.
What are your Schedule E?
Schedule E.
Back to Schedule E, page 1. Okay, I want you to scroll down to the bottom. What question is asked there that we talked about a little bit?
Fair rental days.
No, keep going down. Well, yeah, that's 365 because she had it. Keep going down. What's down there? What does it say?
Did you actually participate in the rental activity during? Yes.
So I'd say yes.
Okay. All right. Now, let's go back to 1040 page 4. Are you on the Schedule E?
On Schedule E.
Okay, go down.
Look at that. Now it.
There you go. Look at that question. What's that question say that has a red yes or no?
Yep, now you got the loss.
Oh,
The negative 3796.
I
got B two, but you did, so.
Okay, now go back to your 1040 page.
I get, 37. Did you close?
Yeah.
Did you do it
Oh, we're
yourself?
close.
No, did you, were you in the business of? But you were participating in the IRS business. So now what shows up on the 1040?
Gambling.
Rental, real estate, minus 337.82.
Okay, so now it took it over there.
Loss. So what
Yeah.
do you got, 236 coming back? Yeah, but now that real estate rental loss can't go on her regular income, right?
What's that?
That real estate rental loss, only 3,000 can go against her regular worth income or earned income. Because it's passive.
Yes, the remodel. You still put the August 16th. Is that what you put there?
But you have something in red though,
Give gambling.
On the $800, my depreciation and amortization in section 179 is showing up red.
Oh, wait, here's a mistake. I think I just.
What's that? You're shut. I got a what?
So my asset worksheet is still showing up red here. Under this guy.
The state depreciation, 179 deduction of base is different from federal amounts. Check here. So is it different? No. Click in there. Yep. Unclick it. Now hit F3.
Oh, yeah, that state depreciation is that we really have to.
Get rid of that. Well, you gotta click in it first. It's quirky. Now click it. Unclick it. Now hit F3. Unclick it. Now hit F3. There you go.
Okay, there we go.
Then you go back, hit F3. Okay. All right. Okay. What do we have? I had
26.
I got 226 and state balance 143.
I have minus 123.
What's that?
Why is the gambling coming up as a red 659? What's that already?
Yeah, I have the same problem.
Which one's that?
Gambling's coming in as a red 659
Where at?
on the worksheet and on the 1040.
On the worksheet? What worksheet?
The one where you put in the 659 from the W2G.
Okay, so you're on your W2G and what is red?
What about the state refund? I
I
missed
put
that.
that in. Okay, so I'm on the 1040 worksheet 7, which is where we put the gambling for other incomes. So I could put the loss down in the bottom. Oh, it's-
Oh, okay. So that's because you try to put it on there first before you put it in W2G. So get the F3 there.
Oh, there's that. I think I clicked on my comments.
Okay. Put the
So,
refund in?
Yeah, the itemized part. Yeah, the very
okay,
first.
so now this still, is that the same issue?
Yep, refund 226.
Hit F9 on that. Go to the worksheet.
That's where it was. I missed the
Is it just because I started that the wrong way?
Yeah, refund at 226.
I didn't. I got 511, so I did better than you.
Yes, I just got it.
226?
Yeah.
226 and 123?
How come I didn't?
Wow.
We're still running
Wow, that's a
gambling.
lot. Lots going on.
Okay, go back to your,
That was good.
Yeah. Still,
yeah, I'm not sure what you put in there. Go to your worksheet 7. Right here.
I like
Just
that.
hit
That's a
F9.
good problem. Stuff.
Roll up, one did in there. Let's see what's in there. Oh, you put your 9 in there.
That's a good problem.
Like that one?
Yeah.
Gambling when
Yeah, because you try to put it on there first. Okay, so go
Maybe.
right there.
No, say I rented it out and it was less than 15 days.
Finish up.
yeah.
It would have just been other income, huh? Yeah, 1040.
No, you
Oh,
don't
no,
have to claim it at all.
why is this still giving me?
What?
wrong answer?
You don't have to claim it at all.
We'll take a look.
You
at
don't
this.
have to-
Give me this.
It's not taxable.
The first question of the chapter 15 is, it's.
All right, so 226 and 123, okay?